Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bloks Group Limited annual report. Bloks Group Limited offers a range of businesses and services that cater to the toy industry in mainland China. The company's primary focus is on designing, developing, and selling brick-based and assembly character toys. In terms of sales channels, Bloks Group Limited operates through both offline and online platforms. Offline sales are facilitated through distributors and consignment sales, allowing customers to purchase products directly from authorized retailers. On the other hand, online sales are conducted through various e-commerce platforms, providing customers with a convenient and accessible way to purchase Bloks products. Overall, Bloks Group Limited's business model encompasses product design and development, as well as multi-channel sales distribution, making it a comprehensive player in the toy industry in mainland China. Bloks Inc.'s stock price has experienced a significant decline of over -51.66% in the past year due to several news events that have negatively impacted investor confidence. The company's reduced profit guidance in the first quarter of 2025, citing a difficult macroeconomic environment, was one such event. Another major contributor to Bloks' stock crash was the Consumer Financial Protection Bureau's (CFPB) enforcement action in January 2025. The CFPB ordered Bloks to pay customer refunds of up to $120 million and a $55 million penalty due to weak security protocols that put Cash App users at risk. In addition, Bloks reached a $40 million settlement with the New York Department of Financial Services, NYDFS, in April 2025 for significant failures in its Bank Secrecy Act/anti-money laundering compliance program. The company's third-quarter earnings miss in November 2025, which saw adjusted earnings per share fall short of analyst expectations and revenue below projections, further contributed to the decline. These developments collectively created a challenging environment for Bloks stock throughout 2025. However, early 2026 saw a positive shift with Bloks stock jumping over 25% after the company announced job cuts and raised its 2026 outlook, attributing the layoffs to increased efficiency through AI and intelligence tools. Bloks Group Limited market capitalization of $15 billion is materially smaller than most of its industry peers of roughly $28 billion. Bloks Group Limited trades at a higher price-to-earnings ratio of 88 times and a higher price-to-book ratio of 5.15 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 200% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline for a company can be identified by examining various factors that contribute to its financial performance. On the positive side, offline sales have seen a significant increase of 275.93%, followed closely by online sales at 63.15%. The introduction of new products and product lines has also been a major contributor to revenue growth, with the launch of new series such as Bloks Wheels and TRRAVNTWRE generating substantial revenue. The company's expansion into new toy categories, including assembly vehicle toys, has also led to increased sales. Furthermore, the commercialization of self-developed IPs and licensing agreements have contributed to revenue growth. The increase in sales volume of value-price segment toys and the successful launch of new product lines have also been significant drivers of revenue growth. On the other hand, consignment sales have seen a decline of 2.04%, while others have experienced a more substantial decrease of 107.65%. These factors highlight the importance of diversifying revenue streams and managing different types of sales channels to mitigate potential declines in revenue. Overall, the company's ability to adapt to changing market trends and expand its product offerings has been key to driving revenue growth. The company's operating cash flow has shown a significant improvement over the past year. In 2024, the company experienced a negative operating cash flow of RMB-1,123,219. However, this trend reversed in 2025, with the company generating a positive operating cash flow of RMB 1,234,109. This shift indicates that the company has successfully addressed its financial challenges and is now producing sufficient cash to cover its operational expenses. The company's financial situation has undergone a notable shift. A substantial increase in debt levels is evident from RMB 566.7 million in 2024 to RMB 753.8 million in 2025, indicating a significant rise in the company's liabilities. While there is no explicit mention of a change in interest expenses, the increased reliance on bank loan facilities and trade and notes payables suggests that interest expenses may have also risen due to the higher debt level. This implies that the company is now shouldering greater financial burdens, which could impact its overall profitability and stability. Management's outlook for the company is optimistic. Despite recent amendments to financial reporting standards having no significant impact on the company, management is focused on enhancing sales performance and enlarging product offerings to match capital expenditures. This strategic approach aims to drive growth and profitability. The company is expanding its business scale through investments in research and development, R&D, and recruitment of more employees. This expansion is a response to growing market demand, indicating that the company is well-positioned to capitalize on emerging opportunities. Overall, management's strategy prioritizes innovation, growth, and customer satisfaction, positioning the company for long-term success. There is no notable activity in terms of acquisitions or divestitures. The company has not engaged in any significant transactions involving the purchase or sale of assets or businesses. This suggests a stable and consistent approach to its operations, with no major changes in its portfolio or structure. The company's financial activities in the past 2 years have been notable. One significant action taken by the company is the repurchase of shares. In 2025, a total of 704,100 shares were bought back for $65,353,000. This move demonstrates the company's confidence in its future prospects and commitment to enhancing shareholder value. On the other hand, the company has not paid any dividends in either 2024 or 2025. Despite this, the share buyback program suggests that the company is prioritizing returning value to shareholders through alternative means. Concerns about inventory buildup and supply chain disruption. There are growing concerns about inventory buildup within a company. A review of recent data reveals an increase in finished goods, raw materials, and goods in transit. Specifically, the levels of finished goods have risen by 15%, while raw materials have increased by 33%. Furthermore, the amount of goods in transit has surged by 52%. These numbers suggest that the company's inventory management is facing challenges. The high levels of raw materials and goods in transit may indicate a potential bottleneck in production or distribution. Moreover, the increase in finished goods could be a sign of overproduction or slow sales. The provision for impairment is also higher than last year, which raises concerns about the quality of the company's inventory. This suggests that some of the inventory may be obsolete, damaged, or otherwise unsellable. If this is the case, it could lead to significant losses if the company is unable to sell these items or recover their value. Overall, these findings suggest that there are legitimate concerns about inventory buildup and supply chain disruption within the company. Addressing these issues will be crucial to maintaining a healthy balance sheet and ensuring the long-term success of the business. That concludes the financial summary for Bloks Group Limited. Feel free to comment below and I will be happy to answer them when possible.